This is ShadowQuant Forex Edition, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Sunday, May 10, 2026, and this is the After Hours session. Now, let's get into it. The market is caught in a tug-of-war between risk-on optimism and the looming shadow of rate hikes. With the Fed meeting this week, the FOMC minutes due on Monday, and the CPI report on Tuesday, the week could be explosive, but only if the data breaks the current bearish pattern. We're entering the week with the Fear and Greed Index at 14/100 extreme fear. The dollar is holding its ground, gold is up 0.24%, and the S&P 500 is flat. The key levels to watch this week are the 1.1781.179 zone for euro-dollar, 156.6 for dollar-yen, and 0.776 for dollar-Swiss. The 10-year 2-year yield spread is still flat at 0.48 pp, and the COT shows leveraged funds heavily long euro, yen, and pound, but short Canadian dollar, Swiss franc, and Kiwi. The macro regime is in a tight spot. The Fed is stuck between inflation still above 3.2% and a flat yield curve. The CPI on Tuesday could be the biggest catalyst. If it comes in below 3.1%, the market will price in a pause. But if it stays above 3.2%, the Fed will have to stay hawkish. We're also watching the ECB meeting on Thursday. They could signal a rate cut, but the data isn't there yet.
On the technical side, euro-dollar is testing the 1.179 level. If it breaks above, that could signal a move to 1.182. Dollar-yen is holding the 156.4 support, but if it breaks below, we could see 155.5. Dollar-Swiss is trying to retest the 0.776 level. A break above would be a strong signal. The VIX is in a tight range. But if we see a drop below 16.18, that could be a short-term bullish trigger.
Institutional positioning is telling a mixed story. Leveraged funds are long euro, yen, and pound, but short Canadian dollar, Swiss franc, and Kiwi. Asset managers are net long euro, pound, and Aussie, but net short Canadian dollar and Swiss franc. The DXY is still strong, but the CFTC data shows the dollar is getting overbought. If the dollar breaks above 101, that could be a sign of strength, but if it breaks below 100.5, that could be the start of a correction.
The biggest risk is the market's overconfidence in a rate cut. If the Fed doesn't cut, the market could reverse. The COT shows leveraged funds are overlong, and the VIX is too low. We're also watching the crypto space. Ethereum and Solana are overbought, and the funding rates are too high. If the market starts to correct, we could see a sharp drop in risk assets. The biggest surprise could be a stronger than expected CPI or a shift in the Fed's forward guidance.
The big picture is that the market is waiting for the Fed to make a move. The data is mixed, inflation is still above target, but the economy is slowing. The COT shows strong institutional buying in euro, pound, and yen, but shorting Canadian dollar and Swiss franc. The VIX is low, but not in a panic. If the Fed signals a pause, the market could rally. If it stays hawkish, the dollar could continue to hold. The key is the CPI. If it breaks below 3.1%, we could see a shift in sentiment.
The Fed is the main catalyst this week. If the CPI comes in below 3.1%, the market could rally. My call, euro-dollar bullish, target 1.182 by Friday.
Euro-dollar is breaking the 1.179 level. If it holds, the next target is 1.182. My call, euro-dollar bullish, target 1.182 by Friday.
Leveraged funds are long euro and yen, but short Canadian dollar and Swiss franc. The DXY is holding strong, but the COT shows it's overbought. My call, dollar-Swiss bearish, target 0.77 by Friday.
The market is overconfident in a rate cut. If the Fed doesn't cut, the market could reverse. The VIX is too low and the COT shows leveraged funds are overlong. My call, S&P 500 bearish, target 4,000 by Friday.
The Fed is the main catalyst. If it signals a pause, the market could rally. If it stays hawkish, the dollar could hold. The key is the CPI. My call, S&P 500 bullish, target 4,050 by Friday.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Forex trading carries significant risk of loss. Always do your own research before making any trading decisions. That wraps up this edition of ShadowQuant Forex Edition. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.